And it's the same for those other balance day adjustments as well. If we had have looked at accrued revenues and accrued expenses, it would be the same idea. You're just doing the opposite to what you would do in that original balance day adjustment entry. So another aspect of the syllabus is being able to prepare fully classified statement of profit or loss and statement of financial position. So let's have a look at an example question that you may have, where you also need to do the adjustments as well. So we've got a trial balance. The 30th of June 2021 is when the period is, and then the list of adjustments to be carried out. So we're being asked to record the balance day adjustments in the general journal, create an adjusted trial balance, prepare a fully classified statement of profit or loss, and statement of financial position. So we've just got a regular trial balance with all of our different accounts and our adjustments. Inventories on hand following a physical stock take are 42,000. So this is where you would go to your trial balance and you would see what was it recorded as and compare that. So you can see the second from the top is inventories, 44,000. So the physical stock take revealed that we had 42,000 instead of 44, and that is less. That amount is less, so that means we have an inventory shortage. Interest received in advance was $80, so we're receiving interest in advance. So that means that it's a revenue, but we haven't earned it yet. So an unearned revenue of $80. Provision for doubtful debts is to be 2% of accounts receivable. We've got our different depreciation on different assets. Outstanding sales salaries are $800. So that is an accrued expense because we haven't paid that expense yet. It's outstanding. That's outstanding has two different definitions there. Advertising prepaid is $149. That's an easy one. Got the word in the adjustment there, prepaid expense. And then accrued rent revenue is $230. So that's an accrued revenue. So our general journal will look like this. As I mentioned, we could see that there was that inventory shortage of $2,000 because in our records we had it as 44,000, but our stock take revealed we only had 42,000. The difference with those amounts is 2,000. So that's what we record in our inventory adjustment. For our prepaid expenses for advertising, we've got 149, and we can see that that's taken directly from this adjustment here of advertising prepaid is 149. Sales salaries of $800 was our accrued expense, again taken directly from the information that we've been given. Our accrued revenue for rent, 230, again taken from that. Interest revenue of 80 is also taken from the information we were given. The provision for doubtful debts, $89 is the amount that we've got here. And so that is something that we had to work out based on that information that we were given. 2% of accounts receivable is what we were told. We can see 89 is the bad and doubtful debts account in our trial balance. The bad and doubtful debts and the provision for doubtful debts. So $101 is what we calculated for that based on that information. And then we've got our depreciation amounts as well. So on the next, at the end, we'll see a slide that shows explanations of each of those as well. So a statement of profit or loss, we've then got recording all of those things that were in our trial balance, and then also adding in those general journal entries to reflect those balance day adjustments we made. And our finishing net profit figure as well. So you can see for example, the inventory adjustment comes into play here. We've got that $2,000 there. We've got our we've got our other bad and doubtful debts, for example, is there for 101 as well, because that's a finance expense. Then we've got our statement of financial position. So this is where we've got some of our prepaid and accrued things. So prepaid insurance, accrued revenue, they're both there. And then that means that those things are factored into our overall equity. So this is a bit of an explanation of those different figures that we calculated. So the desirable provision, and we calculate 2% of accounts receivable, 192, and you end up with 91. 8% of 9,750 for your accumulated depreciation. So it's about finding the right amounts from the trial balance and substituting them into the formulas that you need to memorize for each of the different accounts. And so I encourage you to have a look at this information as well to show you